Welcome to the Credit Drive. My name is Andy. Did you know that Experian estimates 30% of Americans have poor or bad credit? That 30% means about 68 million people have bad or poor credit scores. So at 601 or lower, that qualifies you for poor credit. Credit can be vital to your life. Credit can be something that improves the quality of life of you and your family for the better. And today I'm here to talk about the 6 damaging effects of what poor credit and bad credit can have on your life. Number 1, your loan applications might not be approved. So that means lenders and creditors see borrowers with poor credit as high risk, which means that you're less inclined to get the money that you need from a creditor or from a lender. Whether you're looking to buy a home or find a loan for a new car, your loan application could potentially be denied for having poor credit. Number 2, you'll be subject to high interest rates. If you do get approved for a loan, you'll most likely end up being stuck with a really high interest rate. They'll make you pay more, and since lenders see people with poor credit as risky business, so to speak, they'll make you pay for your sky-high interest rates on the loans that they give you. So you'll be paying more towards the interest rather than the principal over time. Number 3, you'll be subject to higher premiums on your insurance. So even insurance companies check backgrounds and credit history for poor or bad credit. So the lenders and the creditors, they see people with negative credit scores. They associate that with increased insurance claims. So this means that their theory prompts them, insurance providers, to check a credit score for the person's background, and if they find that your credit score is less than par, you'll be likely charged a higher premium no matter how many claims that you've actually filed. So number 4, which is very, very risky, so to speak. Number 4 is you might have a tough time landing a job. So if you apply for a job, your employer or the person that you're looking to have hire you might actually run your background check and look for your credit. So many jobs, especially in upper management or the financial industry, have specific criteria that potential employees need to meet, including having a strong credit score. You might find it a lot more challenging to land a job because of your bad credit. But if you've got a lot of credit debt that's outstanding, even a bankruptcy, you may not even be hired. Starting your own business is number 5. Not only will finding a job be more difficult with a low credit score, but even starting a business might be a challenge. Many new businesses need bank assistance to get started. And with a low credit score, banks are less likely to approve your loan regardless of whether or not your business idea is a great idea. And number 6, you'll have a harder time getting an apartment. If you are still moving and you're youthful and you're still going from place to place, or you're in college, you have to keep your credit score good. How many of you have ever applied for a job in upper management? Awesome, me too. So oftentimes in the banking industry or financial industry, or the financial industry, they will run a credit check and a background check on you before they hire you. Even landlords check your credit score. So it's not about your apartment history, whether or not you've been evicted, but if you've got bad credit, the landlord is less inclined to approve your application. Much like insurance companies and banks tend to make assumptions about those with poor credit and are more likely to deny you and associate you with delinquent monthly payments, which puts the company at a greater financial risk. So now I'm going to introduce Rabia on building good credit.
Thank you. Building a good credit score takes time, probably at least 6 months of on-time payments. Practice these good credit habits to build your score and show that you're credit worthy. Make 100% of your payments on time, not only with credit accounts, but also with other accounts such as utility bills.
Bills that go unpaid may be sold to a collection agency, which will seriously hurt your credit. Keep your credit utilization low. Utilization is your balance when compared to your limit. We recommend paying in full each month, but if you do carry a balance, don't let it exceed 30% of your credit limit. Avoid opening too many accounts at once. New accounts lower your average account age, which makes up part of your credit score. Keep accounts open for as long as possible. Unless one of your unused cards has an annual fee, you should keep them all open and active for the sake of your length of payment history and credit utilization. A credit report is a record of how you used credit in the past. Your credit scores estimate how you'll handle credit in the future. Using the information in your credit reports. You'll want to monitor both to watch for errors and to see your credit building efforts pay off. Referral Wealth Builders can help you with our education platform. You will learn how to turn your credit into renewal income.